Good afternoon, viewers. Welcome to Sunday Olugbenga Akani online tutorial. So this afternoon, we want to treat advanced audit, assurance and forensic (AAAF). And the topic of this afternoon lecture is laws and regulations on audit and assurance engagement part 1. So the reason why audit and assurance service should be regulated is because of public interest, and assurance provider will give an impartial professional view on issues that matter to users of financial and other information. It is therefore important that this view it is important that the view that will be provided by the assurance provider should be trusted. Therefore, assurance providers need to operate within ethical boundaries and to consistent standard. See that there are a number of factors that constitute the ethical boundary, that determine the ethical boundary. For example, the regulatory body of a particular jurisdiction. As in the case of Nigeria, ICANN is the regulatory body that is regulating the activities of and operations of auditors and assurance provider. Then law is also another example of that regulates ethical issues. Then we have consistent standard. We have international standard on auditing. We have international financial reporting standard, and so on and so forth. So next thing we shall be treating is appointment of auditors in Nigeria, which is addressed by section 401 of CAMA 2020. So every company shall at each annual general meeting appoint an auditor or auditors to audit the financial statement of the company, and to hold office from the conclusion of that until the conclusion of the next annual general meeting. That's what we are saying, is that if this year's annual general meeting is concluded, for example, on the 15th of September, 2026, for instance, so the auditor will hold office from that 15th of September till when the annual general meeting of next year 2027 will end. That could be September 25, it could even be August 5th, but it is from the conclusion of a particular year annual general meeting to the conclusion of the other year, to the conclusion of the following year annual general meeting. That's when the auditor will hold office. So, and at any annual general meeting, a retiring auditor, however appointed, will be reappointed without any resolution being passed, unless A, he is not qualified for reappointment, then B, a special resolution has been passed in the annual general meeting meeting, appointing some other auditors, or providing expressly that he shall not be reappointed. Then lastly, he has given the company notice in writing of his unwillingness to be reappointed. So that's it. You see, the reason why the auditor may not be reappointed, he is not qualified for reappointment. And a good example of the reason why the auditor may not be qualified for reappointment is if he is bankrupt, for example, or if he has become a person of an unsound mind, then he will not be qualified for reappointment. Then a special resolution has been passed in the annual general meeting appointing some other auditors or providing expressly that it shall not be reappointment. So when we are talking of special resolution, it means that at least 75% of the shareholders that are voting that the auditor should not be reappointed has voted, and so the auditor will not be reappointed. Then lastly, he has given the company notice in writing of his unwillingness to be reappointed. That is, the auditor himself give a notice in writing to the company that he will not want to continue to audit their financial statements. So that is that about that. So the next thing we shall be looking at is removal of the external auditor. Say the removal of external auditor is addressed by section 409 of CAMA 2020. So I will see that in Nigeria it is the ordinary shareholder that can remove the external auditor by passing an ordinary resolution with special notice. So the director who in the first instance recommend the appointment of the auditor cannot on their own fire the auditor. So you see that it is the only ordinary shareholder that can sack or terminate the appointment of ordinary of the external auditor, and the mechanism they will use is ordinary resolution with special notice. So when we say ordinary resolution, what that one means is that at least 51% of the total shareholder voting for the auditors to be removed have to vote. So they must be above 50. So if it is only 50%, the resolution will not pass. That's a situation that is called a stalemate. But once it is 51 above, then the resolution will pass and the auditor will be removed. So see that the ordinary shareholder can remove the external auditor by ordinary resolution with a special notice, and they must also ensure that they communicate with the corporate affairs commission between 14 days that they have removed such external auditor. That the company must communicate the development to the corporate affairs commission within 14 days, and failure to do so will attract a penalty as will be prescribed by the commission in its regulations. So that is that about the removal of the external auditor. Then we go to resignation of the external auditor. that the resignation of the external auditor is addressed by section 412 and 413 of CAMA 2020. So the auditor has the right to resign from the work of the client company, and reason for resignation may include reasons for resignation may include one, consistent lack of integrity on the part of management and or those charged with governance. Then 2, significant fees remain unpaid. And 3, the auditor can no longer maintain its independence e.g. following a corporate action. Then lastly, for the point of profit the audit firm. See that these are the 4 reasons why an auditor may resign: if there is consistent lack of integrity on the part of management and no charge with governance; then if significant audit fees remain unpaid; then if the auditor can no longer maintain its independence, the auditor or the audit firm, as you may wish to call it, then if the following a corporate action. That may be if the client threatens the audit firm with litigation. Example of that is that when the client threatens the auditor with litigation. Then the last one is the client has become unprofitable to the audit firm. So the next thing we shall be looking here is procedures for the resignation of the current or the don't forget, our topic is laws and regulations for audit and assurance engagement. So we want to look at the procedure for resignation of the current auditor. Number one, the resignation should be made to the company at its registered office in writing. Then the company should submit a copy of the resignation letter to the appropriate regulatory body. So that appropriate regulatory body in the situation of Nigeria. In Nigeria, law will be the CAC, Corporate Affairs Commission. Then secondly, the auditor should prepare a statement of the circumstances the auditor should prepare a statement of the circumstances Then the statement of circumstances set out the circumstances leading to the resignation of the auditor. Then number 3, the statement of circumstances should be given to A, the commission within 14 days and B, any person that has right to collect a copy of the company financial statements unless the court rule that the auditor is trying to defame the company with needless publicity. Then four, failure to comply with the above provisions will make the company and every officer of it responsible for the default to be liable to a penalty as would be specified by the Commission in its regulation. So that's about the procedures for resignation of current auditor. So we now look at eligibility to act. Eligibility to act as an external auditor. Eligibility to act as an external auditor depend on membership of an appropriate regulatory authority, and for Nigeria it is, an example is ICANN, the Institute of Chartered Accountants of Nigeria. So the role of such regulatory body include one A, so the function of ICANN, for instance, will include providing professional qualifications to auditor, to provide evidence that auditor possess minimum technical competence. Then number 2 will be that ensuring that the professional So the next one is that ensuring that the professional competence of member is maintained. And this will include matters such as 1. Ensuring that audits are performed only by fit and proper person. Acting with professional integrity. Right? 2. Ensuring that auditors carry out their audit in accordance with appropriate technical standard
such as international standard on auditing. And 3, ensuring that auditors are up to date with modern auditing practices, e.g. by following a program of continuing professional development. And the fourth one is establishing procedures to ensure that members are complying with the rules of the regulatory body by investigating complaints against members and implementing disciplinary procedures where necessary. See that. Then the next one is providing a list of registered auditors to the public. So those are the
regulations by the profession to which auditors belong. So the next set of regulation is regulation by government. Regulations by government. So the first regulation that was treated is regulation, self-regulation by the auditing profession itself. So the second one is regulation by government. So it is an alternative to self-regulation, whereby the government may appoint a public body to oversee the activity and operations of the auditor, to authorize and approve individuals to act as auditors in the society, and to also